Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Within the pharma space, Novo Nordisk, the ADR's American depository receipts, down by double digits. In fact, lower for a fifth day, losing about 16% today. And this is after its next-generation obesity shot, CagriSema, delivered less weight loss than Eli Lilly's rival treatment. Let's bring in Sam Fazeli. He is our Director of Research for Global Industries and Senior Pharmaceuticals Analyst on what's happening here. And Sam, I mean, we've been keeping a close eye on Novo Nordisk because it was a pioneer in weight loss drugs, but it appears that it has really fallen behind Eli Lilly and continues to fall behind even with this next-gen obesity shot. The data shows a 20.2% weight loss after 84 weeks compared with Eli Lilly's 23.6% weight loss. I mean, that sounds like it's pretty small differences. Is that an unqualified failure?
Well, the trial was set up, Scarlet, to test one drug against the other, and it failed, right? So that's when they start these trials, they have a hypothesis. We think our drug is as good as this one. And they set the hypothesis up. They do the right number of patients to prove that CagriSema is as good as tirzepatide. It didn't prove that. What it does, I mean, I don't really care about these 23%, 25%. A lot of people are happy with the weight loss they get and they maintain the weight loss. That's what they care about. This rapid weight loss, a very large weight loss, may matter for much more obese patients potentially. But the reality is this is handed a gift to Eli Lilly now. Once this data is published, they can go out there and say, well, look, we've beaten Wegovy. We've beaten the next generation drug they've got, at least on weight loss on the surface. What happens to muscle loss and all that sort of stuff will come out. Oh, peripheral fat versus visceral fat, etc. We've beaten them. This is the drug to take. And they should be able to sell as much as they can make. So, which is kind of what's been going on already.
All right. Thank you for explaining that. It's the relative effectiveness, and in this case, giving Eli Lilly an easy win. Why is it that Novo Nordisk has lost so much ground and its edge to Eli Lilly? Does it come down to the science of it, or is there something culturally at the company that's led to this underperformance?
Yeah, I can't speak to the culture, to be honest with you. I mean, this has been a phenomenal story for years, right? They were the pioneers in obesity. They in diabetes with this class of drugs. They brought for obesity. They have a lot to applaud for them for. The point is, all these companies take calculated risks. Back in 2015-16, Lilly took a calculated risk to try this new molecule, a GLP-1 attached to it, a GIP. Let's forget what they are, but they're two different ways of modulating the system. And nobody thought that GIP would do what it did. So they were lucky, they threw the dice and they got the right answer, or they just had a very clever biology person who said, I disagree with the rest of the world, GIP will do this. So they ended up with a supercharged product. And then, of course, Novo never went down that road. Even since 2018, when we all saw the first data, we went, wow, there's a whole bunch of other companies who did this. We have a list that we keep. Not Novo. They put their dice, or they put their money on this combination, amylin. A lot of people have too. But so it hasn't worked out. It's just the way that drug development goes. In 6 years' time, you might find that some mechanism they've got starts to beat what Lilly has. But we don't see that at the minute, and we haven't got any sight on those things.
Well, Karen from the Jersey Shore writes in and says she is a huge fan of Wegovy. It worked just great.
There you go.
Sam, here we go. Merck splitting its main pharmaceutical unit in two as it prepares for the approaching patent expiry of its best-selling drug. What's going on here?
Yeah, so there's one other company that does this, and it's been one of the, you plot the share chart and you go, wow, that's pretty cool. And that's AstraZeneca. AstraZeneca has for a long time had a division, a person responsible for oncology business and responsible for oncology drug development. That's always been there. I think they recognized they had assets and that oncology drug development is quite different to every other area. Here's Merck now doing the same thing. Is it suggesting that they, because of the number of drugs that they've got coming, some in oncology, some elsewhere, it's better to have two units that look after these two things, especially in the R&D side? I think they're doing the right thing. I don't think it tells us much about separating the reporting lines and all that sort of stuff, or the P&L look of things. I think it's much more to do with making sure that they're going to get the best chance in the specialty pharma, as they call, and oncology. And I think that's the right call to make by them.
Does it lead to a formal spinoff where you might have two publicly traded companies, or is this more like an internal division within the company?
Yeah. I doubt this is about a spin-off. I mean, who knows? I'm not in the board of Merck and listening to the, or even a fly on the wall. And the thing is, I don't think you need to go that far. I think this just reorganizing the business in a way that works best for the pipeline. And I think that's the right thing to do, especially if my colleague Aude Gersbacher and Vinay Hamilton are right, that actually the Keytruda that people think is going to expire in terms of their patents in 2029 has another extra 3 years of cash flow or 4 years of cash flow to 2033. Remember, it's the biggest drug in the world. If they're right in their patent analysis, this really puts that oncology business in supercharged mode.
Yep. Sam, thanks so much for joining us. Appreciate it. Sam Fazeli, Director of Research for Global Industries and Senior Pharma Analyst for Bloomberg Intelligence. He's based in London, where it's not snowing. Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
One of the big gainers in today's trade, or maybe big is an overstatement, but given that we're seeing sizable losses in the equity indexes, I'd say a 2.4% move higher is kind of big, right? Yep. Domino's Pizza, DPZ is the ticker, moving higher today. The company reported a bigger than expected rise in comparable sales. So let's bring in Michael Halen. He is our senior restaurant and food service analyst for Bloomberg Intelligence. And Michael, Domino's provides a lot of value to people. You see those ads for buy one, get one free. And they've added stuffed pizza crust to their repertoire. So people are getting value, and they're getting something, I guess, in terms of food value as well. Talk to us about Domino's Pizza and the strategy here.
Yeah, so to your point, they are outperforming the market pretty handily today. It was a pretty solid report. Same-store sales topped expectations. They're doing it with a few different things. Yes, the food innovation, stuffed crust isn't groundbreaking, but it's something that their national competitors had already offered, right? And so they're trying to take a piece of that market here in the U.S. Value, to your point, right? They're number one pizza player here in the United States. They have more stores than anyone else, and they have that scale. So they are able to offer price points that their competitors really can't match and keep it profitable for the franchisees. And then another big part of the strategy here has been the DoorDash and Uber Eats expansion, right? So they're still delivering the food themselves, but they're posting their food on the third-party aggregator sites, and that's been a big boost to their business as well.
What's the difference in economics, Mike, to using one of their own drivers versus a third party like a DoorDash?
Yeah, it's a big difference, Paul. It probably costs a big player like Domino's. It would probably, for them to deliver it themselves, it probably costs them half of what it would cost. Maybe even less than half of what it would cost. So it makes a huge difference on the delivery economics. So for the chains that already have a delivery network like Domino's, it's really a no-brainer.
One thing that Domino's did over the last quarter was make more money by selling more food to its stores, charging higher prices for ingredients, collecting more fees from the franchise operators for advertising and royalties. That's good for the bottom line, but does it sour relationships with franchise operators? I mean, how does Domino's manage that going forward?
Yeah, that's a good question, Scarlet. Franchisee relationships is crucial in this business because they're going to be the ones, forking up the capital to build new stores, right? So you want to keep them happy with strong same-store sales. 3% plus, almost 4% gain keeps them happy. In terms of the supply chain, so Domino's owns the supply chain. They want to make sure that their franchisees aren't skimping on quality, right? And so what they do to make this palatable for their franchisees is they actually split the revenues on a monthly basis via checks with their franchisees, right? And so, yes, prices are going up, expected to go up low single digits this year for commodities and in the supply chain, right? But they give back half of that, half of their profit increase back to their franchisees in a sharing agreement.
All right, Mike, thanks so much for joining us. As always, our go-to voice on all things in the restaurant business. Mike Halen covers the restaurants for Bloomberg Intelligence. Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Apparel retailers, they win some tariff relief on the Supreme Court ruling. So how about that? So maybe some of these apparel retailers will get a little bit of a break here as they've been bearing some of the brunt of the tariffs here. Mary Ross Gilbert joins us, senior equity analyst. She covers the retail space for Bloomberg Intelligence. She's out there in LA where it is not snowing, I can tell you that. Mary, thanks so much for joining us here. Supreme Court ruling striking down some of those reciprocal tariffs. What's it mean for the retailers that you cover?
Yes, so Paul, what this means is that we're going to get some relief. We're not getting complete relief from tariffs. So when you think about it, just before Trump over the weekend on Saturday, first on Friday, he said he was going to exercise his ability to enforce Section 122 of the 1974 Tariff Code, and you can go up to about 15%. So on Friday, he announced 10% immediately, or actually it was in 3 days, and then Saturday said immediately 15%. So really what that means is you're going to get about a 25% savings from the tariff rates that these apparel retailers were paying just prior to this news that came out on Saturday. And so we estimate that the savings could be anywhere from 20 to 50 basis points, maybe a little more than that. And many of these apparel companies have been putting in mitigation measures. And of course, the number one being, well, first of all, diversifying away from China, so they have a lot less exposure there. And then also their suppliers absorbing, let's say, about half of the tariff impact. And then, of course, price increases, and that's being passed on to the consumer, and it's done very selectively. And so that's why the savings, the net savings, is going to be somewhere around 20 to 50 basis points. And just to give you an example, what companies have disclosed is on an annual basis, they were looking for a net tariff impact, again, net of these mitigation measures, to be somewhere in that sort of 100 to 200 basis points in that range.
So I guess it's interesting here because some of these retailers have, in fact, been right kind of in the crosshairs of the tariff debate. Have any of the companies that you cover, they talked about whether they would even think about getting tariff rebates, if that's a possibility?
Paul, that's a really good question. I can't imagine that a rebate process could actually go into effect. It would be a nightmare to try to go back and recover these funds. It just seems, I don't know. I think it's too complex. I think we just have to let whatever tariffs were already enforced and the funds received. I certainly hope that doesn't happen, because that could turn out to be a very expensive nightmare trying to recover those funds. And then the idea would be, well, should it go back to the consumer once, if companies were to recover it? So
yeah, it's very complex. So given that, we've had, roughly a year of these tariffs. Is there kind of a ballpark that you've arrived at, or the companies have disclosed about how much they took into their margin versus maybe how much the importer took into its margin, the consumer took into its margin there?
Yeah, it's complex to say specifically, but I think what we were trying to allude to earlier, that 100 to 200 basis points, is what these companies are effectively taking in on an annual basis based on commentary from the third quarter earnings call. So they might have gotten hit more or less depending on the retailer that we're talking about and goods that were sourced during various times, right? Because if you had some retailers that sourced fall and winter during that time when China had a tariff that was well over 100%, then that merchandise and their margin was affected very much so because they had already taken delivery of that product. So it depends on the retailer. And then you have a couple of retailers, for example, Aritzia and Ralph Lauren. Both of those companies have been posting margin increases all year. And so they've been able to benefit from strong sales. What that means is that they're able to leverage fixed costs and get incremental benefits there and also pass on price increases. And so even though they've been negatively impacted by tariffs, you're not seeing that net effect. Whereas most of the other retailers, you have seen margins dented, and they've disclosed every quarter what the tariff impact has been, net of mitigation measures, and also they'll provide sort of the gross impact. So like I said, I would say the net 100 to 200 basis points. Think about Gap, Abercrombie. Gap's at the lower level. They said annual impact about 100 to 110 basis points. Abercrombie and Fitch about 170. And American Eagle, they were sort of harder, 200 to 225 basis points.
All right, very good. Mary Ross Gilbert, thank you so much for joining us. Mary Ross Gilbert, she's a senior equity analyst. She covers the retail space for Bloomberg Intelligence, and she's located out there in an L.A., California office. Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Friday, we had the Supreme Court strike down some of President Trump's reciprocal tariffs. We've got some new ones. They're back. 15% coming back. Are these things going to be litigated? I have no idea. Holly Fromm, she's a Bloomberg Intelligence litigation analyst. Holly, thanks so much for joining us here. We had the Supreme Court ruling here. What's left to be litigated, if any? Because there's still lots and lots and lots of tariffs out there.
So what's left to be litigated probably is what happens with all the tariffs that have been collected. Like, do the importers have to go, who want refunds, have to go to the Court of International Trade to seek refunds? Do they have to file lawsuits, or can they just file some kind of application with the Customs Border Protection Agency? So that's a question that's still outstanding. It doesn't affect the tariffs that Trump imposed via Section 232, which were on things like aluminum, steel, and auto parts, and it doesn't affect 301 tariffs that were imposed in 2018.
Okay, so that's where it stands on the main tariffs. What about the de minimis exemption? Explain to us how that works and whether that's affected by the Supreme Court's ruling.
So the de minimis exemption is not necessarily affected. It's an exemption. It's not a tariff. So it's an exemption to a tariff. So we don't know if the ruling means that the court that he cannot remove a tariff. He cannot remove an exemption to a tariff. So it's not necessarily the case so the Supreme Court didn't answer that question. In other words, that ruling doesn't answer the question. But I think there's a case that's playing out now at the International Trade Court. That ruling was that case was stayed pending appeal of the Supreme Court ruling. And so what I think happens is I think that the court will say that he probably can't remove that exemption via executive order. It probably has to be some kind of regulation, and it's not even clear that his trade secretary can promulgates. It's not even clear that he can remove it at all, because there's some question as to whether that exemption is mandatory based on the language of the statute.
If I want to get a refund to some tariffs that I've paid, how do I do that?
So normally what you do is what happens is the goods come in, you estimate what you think you owe. The Customs Border Protection Agency decides whether that's correct. That's called liquidation. If that amount is finalized and it liquidates, you have 180 days to protest what the Customs Agency says you owe. So that's normally how you get a refund. You file a protest. And they think that might be the procedure used here, but nobody really knows because this has never happened before.
Well, if I'm Nike or something like that, I mean, do I say you owe me hundreds of millions of dollars or something like that? Is that how we think it's going to go? Or are they Are companies actually go through the work of doing this?
Well, it probably depends on the amount that they think that they overpaid. And there are also, other issues that they may take into account. So, it's not clear whether all companies will seek refunds. There are probably some companies that say it's not worth it for them to try, so they're going to waive their right to do that. Some of them may be time barred from doing that by virtue of the deadlines to protest. So we don't expect the full amount that's been collected to be refunded.
Holly, what will you be watching for and listening for when the president speaks in his State of the Union tomorrow when it comes to tariffs? I mean, he's going to say a lot of things, and we know that a lot of what he says, he doesn't necessarily, it's more in the spirit of what he wants, but specifically when it comes to the legality of some of this stuff, what will you be listening for?
Well, we want to see like what you said, we want to see what he says, because what he wants has to be justified by some kind of legal authority. And so we want to see, what he's aiming to do. And then we'll try to figure out how he's going to do that. And so there are various tariffing tools that he has, and he's already imposed tariffs via Section 122. But those are time limited for 150 days. So he'll probably use other authorities. And so that's something we're going to look at is, what is he trying to do? Can he use the other authorities to do that?
Holly, was there anything, or I guess what was most notable to you from the Supreme Court ruling on Friday?
I think that was what was really striking was that they said that this statute doesn't allow tariffs at all. So any tariff that is imposed via this statute are probably going to be struck. So tariffs on India and Brazil are going to be struck. And what they said was a tariff is a tax. And so only Congress has the power to tax. And if they are going to delegate that power, they have to be very, very clear when they do that. And, using this vague language in the statute, wasn't enough. And so that, I think that was very interesting. And the other thing to note is that, they did talk about other tariffing powers he has. So it may be the case that, and we think that those tariffing powers rest on, better legal footing. So the challenges will be harder to the new tariffs he imposes if he's going to use, well-settled authorities like Section 232 of the Trade Expansion Act or Section 301 of the Trade Act, both of which he's used before. So challenges will probably be harder.
All right. Good stuff. Holly From, thank you so much. Bloomberg Intelligence litigation analyst on how President Trump's 15% tariff will likely stick. But if it doesn't, he's going to have several options. Holly mentioned Section 232. There's Section 201. There's Section 301. There's Section 122. There's Section 338. All these things take time. So they can't be imposed instantly. They require an investigation. And in the case of Section 232, I believe, Section 122, there's like a time span, a time limit of only 15 months. Right. Which seems like a lot of work to get a temporary tariff.
Yeah. And I guess my question I ask a lot of folks, particularly on the political side, like Henrietta Trez, clearly this is polling, tariffs in general, is polling very poorly. Affordability, broadly defined, is polling as a very key issue. It's almost mind-boggling that the president continues to double down and triple down on this whole tariff issue, but it is certainly key to his trade policy, to parts of his economic policy.
His geopolitical policy?
Yep. I would just, if I were his advisor, I'd say, but it's coming at a big cost, Mr. President, in terms of, and we've got the midterm elections coming up, and we got some people that are nervous, and but I'm sure those discussions are being had. But
he's a second-term president, so maybe it's their problem. It's someone else's problem, not his problem.
Exactly right.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.